We are going to get going. I am going to be moderating the chat the whole time. But to everybody on the call, welcome to the 2026 Farmers Keeper Grain Markets Outlook. Today, we're going to go over the agenda of what we're going to be covering. But in general, what I want everybody on this call, regardless of where you sit in agriculture, because mostly we have several hundred farmers on this call here, but we also have, like I stated earlier, we also have dozens of financial officers, crop insurance agents. We have landlords out there. We have some farm managers out there. We have some custom operations that don't own any ground. We've got some seed reps in this call. I'm trying to think of who else we've got on here as I look through. And we're representing, we did the count on Friday afternoon. There's 28 states in agriculture represented on this call today. So we're covering the whole of the grain belt here. And we're looking forward to getting started in here. As we get going, I'm going to show our disclaimer here. All that good stuff. And let's talk about what we're going to go over today. So we're going to run to the end of the hour here, depending on how many questions that we get. But we're going to go over in general for the first 10, 15 minutes, some updates on Farmers Keeper, what we've been up to, what we're doing to get everybody on the same page, because we continue growing and it's hard for us to tell everybody out there, hey, this is what we're doing. Here's how we can provide value in agriculture. Then we're going to get really to the meat of the conversation, which is talking about the markets and the price outlook out there. And then we've carved out plenty of time for questions. Let me repeat again, those of you who want to ask questions in the chat, go in the bottom right-hand corner, enable yourself on the chat. And I believe that all the chats, because I can see a couple already and I can see a couple waves and emojis at me, those are coming directly to me. Again, for John and Mark and Scott, if someone has a question on financial consulting, I am seeing those messages during this call. I'm going to be managing all those, and I'll save those questions for the end. So please, for the participants out there, if you see or have any questions as we're talking about something, we're going to address all the questions at the end, but shoot them as they're on your mind, and I'll start collecting them here, and we'll come back to them at the questions portion of this, because we got a lot of good stuff to go over. Gentlemen, you ready to go?
Ready here.
Cool. All right. So first off, we're going to be led here by myself hosting the conversation, but one of the newer members to the Farmers Keeper team, who's been a longtime friend of Farmers Keeper, is our senior analyst, John Zanker. Many of you are getting his daily newsletter that actually goes out to over 7,000 farmers now all across the grain belt. And he's been in this industry for 45 years, grew up on the farm. John, you want to say hi to everybody?
Yeah, thanks to everybody for tuning in. And we've got a nice day off, so that helped a lot, and really enjoying my time with Farmers Keeper so far, and really excited about what we're going to be dealing with here. Well, I'm excited at times with what we might be dealing with the markets, but maybe a tough road to hoe, but I think we can get through it. So excited about the possibilities.
Sure. For those of you who don't know John or haven't subscribed to the newsletter yet, John is one of our futures and options brokers and our senior analyst. He puts out great commentary every single day on the markets and really has a good customer-focused approach, on-farm approach to how he manages risk for farmers. He started working with some of our grain marketing consulting clients, and we're looking forward to doing a lot of really cool stuff using AI to put together yield projection models throughout this growing season. So we're really excited to have John on the team. John has been a friend and a mentor to myself and Farmers Keeper for the past 6 or 7 years now, and we're thrilled to have him, and he brings a really positive energy to the team. Next, we've got Mark Knight. Mark, many more of you know on the futures and options side at Farmers Keeper Financial. Mark was the head of farmer risk management at Schooler Grain for over a decade, and he's got lots of experience working on farm with farmers on their risk management and from a consulting perspective. Mark is going to be also coming in here with color commentary. Mark from Kansas City, you want to say hi to everybody?
Good morning, everybody. Thanks for coming.
Yeah. Many more of you have worked with Mark on either hedge strategies or done even one-off consulting about biting off risk in the markets over the past couple of years. Mark really is the one who partnered with me a couple of years ago to start up Farmers Keeper Financial, which became our bulk of our grain marketing consulting and futures and options business out there. And obviously many of you know and love Mark out there. We're going to get into some updates here for everybody. These are some of the things that we've been working on and building on over the past couple of years. We're going to take another 5 minutes in this portion here, but the most important thing I want to communicate to everybody is Farmers Keeper is at a point now where we are starting to work with very experienced experts, bringing them in so that in the places that are relevant to the farmer community out there in agriculture, I can't say you because we have a broad audience out there, not just farmers, although primarily on this call, but we continue to try to find where can we give the farmer value in terms of managing their price risk on the farm. And so we've got a lot of things going that are developing all the time. So this is a good time for us to just blast out and talk to everybody and tell you a little bit more about what we're doing to get more of us on the same page. So many of you have seen this already. We've been running profitability exercises for farmers, especially in the lead up to planting in 2026 here. And what that is an estimated full farm budget of putting together costs from input costs to land costs to insurance and finance costs, and putting together what that cost of production is. And really the purpose of that is putting together an estimated budget that we can use to talk about profitability metrics on the farm, to put together grain marketing plans for our customers and say, what percent sold am I? What percent of my investment of putting in that crop am I getting back in the sales that I've made so far? And then according to different price scenarios in our profitability matrix, this is one that a lot of our customers really like. What am I profitable at? What does my profitability actually look at? So really quickly, this is an example of a farm for corn. On the left-hand side, we're seeing scenarios of yield per acre from a low end of 195 to the APH of 215, all the way to a fantastic crop of 235 for this particular farmer in this particular county. And then we have the price scenarios on the top, all the way from a low end of 367 cash average sale to a high end of 550. And just overlaying to understand, hey, how do I set my price targets? What's profitable for me? What's not? Something else that we've done ad hoc in the past that's really started to build up in the past 6 months here as times get tighter on the farm is our financial consulting. Scott Sarter is one of the newest members of our team. Scott, can you talk a little bit about what we've been doing with financial consulting, helping farmers out there? This is one of the things that we're really excited about here at Farmers Keeper that's been driving a lot of value.
Yeah, thanks, Nick. Glad to be part of the Farmers Keeper team. And everybody knows that you know it because you live it as a farmer, but you can also read almost every day the challenges that we've had recently, economically and financially on the farm. So what we've been doing recently is taking that profitability analysis that Nick was talking about earlier or just now, and taking it to a different level for some customers. My background is risk management. I sat on a trading desk like John and Mark for 6 or 7 years in my career, and then got into banking and finance, and have built a lot of knowledge and capital with farmers on profitability exercises. So what we've been doing is diving deep into the finances, helping the farmer understand where the balance sheet is good, where it's weak, how they can leverage it to get a better operating loan or refi land, which a lot of people are having to do this year to cover maybe some carryover losses or losses on the farm. So when profitability is a challenge, it heightens the need for more attention to the detail in the numbers. And so that's what we're doing from a consulting perspective. And that's where that term fractional CFO is. I mean, some of you guys are operating multi-million-dollar farms and you don't have a CFO. We can come in and take care of that for you. So Nick, I think that's a pretty good summary.
Yeah, Scott and I, like a lot of the way we've built our team now, from those of you, I mean, I see many of our participants here have been customers of ours going back to 2019, 2020, when I started Farmers Keeper out of my house. Many of you saw us and experienced Farmers Keeper purely as what we'll talk about next, which is really just sell some of my grain and do forward-focused pricing. But as we've continued to grow, we're trying to figure out where we can add value to farmers in different climates. And certainly from 2019, 2020 up until today in 2026, we've seen some crazy bull markets and low supply markets. And we've seen really high supply markets that are very challenging on the farm as well. And so Scott does such a fantastic job because of all his experience. Those of you who have worked personally with me know how anal I can be and how organized we like to be for our customers. One of the great things about working with Scott that our customers have loved since he's joined the team is he is there for you to be organized, on the ball, so that you can go manage your farm and that he can really inform what's going on from an analytical perspective. And man, when Scott gets on the phone with your lender, or negotiating any outstanding balances with the input companies, Scott really comes from a position of authority and understanding, and everybody loves to work with him on that. It's something we're excited about, something we wish we didn't have to do for farms, because a lot of times we're helping people in a tough situation, but this is such a critical piece to the farm right now. And I can't say enough about how happy we are and our customers are that have gone through this exercise to help save their farm at a tough time.
Yeah, it's a big difference, Nick. I'll just be brief, but this year, because of the heightened financial stress, bankers are scrutinizing every number more and more. Systems are more important. I think we're entering into a new era of where you have to have bookkeeping, exact bookkeeping and systems that work. You have to have accountants that understand agriculture. And I'm not disparaging our country accountants, but a lot of times your accountant is behind where he should be or she should be on giving you tax advice. So give us a call. We can help you talk through and wade through these waters, at the very minimum, point you in the right direction.
Yeah, and this isn't just for farms, unfortunately, that are going through a really tough time. There's a lot of people out there that are just having a tough time doing their renewals or looking for a new lender or anything like that. We're here to help you and your farm have a clear picture of your financial assessment, what's going on, and a clear package that you can take to the bank to say, hey, unlike a lot of the farmers in my area, I've got my finances in order. Even if they don't look so great on paper, I've got professionals in there helping me put that together so I can be a good partner with you as my lender. That's the whole idea. Scott, thanks. Really, this is one of those things that we can provide a lot of value and a guaranteed service to farmers in terms of helping them create clarity around this in a tough time. Let's go on to marketing consulting. Mark, you've really, this is what a lot of our customers out there viewing are familiar with you on. And it's another place that we've built some really deep relationships with many of our customers. Mark, can you speak to what our grain marketing consulting looks like?
Yeah, absolutely. Look, I always like to start conversations off with, the farmer goes out and he hires an agronomist, he hires an accountant, he hires, crop insurance specialist. But when it comes to marketing, it's kind of just, just throw it to the wind and I'm just done it this way or what have you. It's trying to bring more professionalness, some experience to your actual marketing. And it brings a team together. So we've got our cash side guys. We have our futures and options side guys, John or I. And we're just trying to utilize the different tools at our disposal to create the best opportunity for you and your operation. We've gone through, we go through a break evens, the PE exercise, the matrix that Nick alluded to earlier. Those are all tools, and that's where we kind of start. We kind of need to know, all right, where are the break evens? Where, if we sell 10% at X price, what does that do to the operation? And you just try to use all of that to create the best situation for each individual farming operation.
Yep. Yeah, this is somewhere where if you're a farm and you're saying, hey, I want dedicated time with someone to help me on one of the toughest part of my job that we hear from a lot of people, of putting together my grain marketing plan, working with someone on my hedge strategy, helping me with the cash side of things. And also that education piece is a big piece of feedback that we get of, make me understand more about what the moves are available to me in terms of hedging my price risk on the farm. That's really where marketing consulting comes into play. And Mark, I think you make a very good point there of, we like to start with the fundamentals of, let's understand your farm and your numbers, what your cost of production looks like. That ties in a lot with what Scott's doing on the farm as well, so that we can base things off of that and try to eliminate as much as we can about any type of speculation that's going out there in the global markets. Now, having said that, let's get into talking about the global markets, because that's really where we want to give everybody an idea today about what's going on with supply and demand right now. We're going to show you some estimates there, and then also just some takeaways based on what we're seeing right now in terms of the grain markets, and what we think are some hedge strategies that might be able to protect against risk in those. So before we jump into that, many of our customers knows our managed pricing program, which is forward focused pricing, is starting, has started pricing for those of you who are booked, and we're going to continue enrolling in the first round for the next week or two here. The guys behind me know the exact date. But basically what it is our managed pricing program is, you decide how many bushels of grain you want us to price for you. StoneX has built their algorithms that we run through the futures portion of that. And then you can set your basis and deliver wherever you want. That starts in a couple of weeks. We'll do another round that's going to start in the middle of planting. But basically, we're trying to spread out grain sales for farmers in the least sold time frames that we see, which is, of course, pre-planting and during the summer, because so many sales on grain get made at harvest when prices tend to be lower. Helps you spread out that sales timing, because oftentimes you get busy on the farm or want to wait there for the market to go up just a little bit higher and then things pull back. It's a good way to focus on farming and take the emotion out of some of your sales. So with that, let's jump into the bulk of this conversation, which is talking about the markets in 2026. And I'm going to stay chairing this, but John's really going to head up going over a lot of what we've put together. And first, we're going to look at bullish and bearish factors for both corn and soybeans. And let's start off with corn, John, and let's start off with bullish. John, can you talk through what are you seeing of some of those bullish factors here in the market as we look at the 2026 new crop this year?
Well, going back a year, really have been excited about exports and how they've been booming, and we just continue to add to those expectations, and the USDA keeps ramping up their expectations. But what's it gotten us price wise? Not a whole lot. We had a nice bounce in February last year, and that's been about it. And so that's been disappointing. But I think at some point, this strong demand becomes a real big factor. But we have to figure out a way of getting this production down. So we'll get into that with the acreage here. But Yeah, here we got demand projected at 16.47 billion bushels, beats the previous record by 8.8%. That's a big thing. That's a big deal. That historically, that's something that would have given us a better bounce than what we've seen so far. Export demand at 3.3, again, beats last year's record. Last year's was a record, beats that record by 13.4%. That's just stunning. And again, the price reaction is stunningly bad to that. So I'm going to stay optimistic that at some point this actually becomes a big factor. But the reality is, until we see a production concern pop up somewhere, and that could start with acreage here by the end of the week with the Ag Outlook Forum projecting some of their acres. And as far as the acreage, 98.8, that's a record. That's a huge amount of corn. Certainly exceeded most people's expectations. The USDA popping up the harvested acreage by 1.3 million in January was a really big dart of death to the corn market there. So I think we're going to flip this acreage back. I might be heavier than most in what I see as far as going to soybeans, but just looking at the numbers here from the last 20 years, I expect at least 4 million coming out of that, and it could eventually be 6 to 7 million. And the last one there, Ukrainian production, some more missile and drone attacks by the Russians actually hit Ukrainian's main port of Odessa. So I think this could be something that starts to have a little bit more impact in the coming weeks.
Yeah, agreed on all these, John. And one of the things I want to point out here is what I really like about John's analytics is he puts numbers into context for the farm, because otherwise, having an export demand projected at 3.3 billion bushels, that's a big number for us to think about. But when we look at what that increase or decrease looks like year over year by saying, hey, it's 13.4% more, John does a good job of giving his expert commentary on these things and still putting it into context so that anybody can understand what that looks like. Let's go to the bearish factors, John.
Well, we had a huge corn crop. I mean, we can, over the years, I've seen technical analysis discussed, and I've seen, dozens of other things and factors and so on and so forth. But when you raise a 17 billion bushel corn crop, which is, beat the old record by well over 1 billion bushels, that's just a bunch of corn. Now, whether we actually have a 17 billion or if it's 16.8 or 16.7, it really doesn't matter at this point. It's huge. And, we're seeing, the spreads abnormally wide a little bit here on the March-May. So the corn's out there. And when you're seeing basis on the weakish side in some spots, and you're seeing spreads as wide as they are, I wouldn't spend much time trying to jump on the crop's not this big bandwagon. I don't think that's going to pay off for us.
Mm-hmm.
Soybean corn ratio 2.41. I was just looking at some other years this morning when we saw a big jump in bean acres, maybe 7 million or so. That ratio typically got closer to the 2.6 mark when we saw a major jump. But I still think, and given some of the financial concerns that we're seeing at the farmer level, at the bank level, I think we're going to bring corn acres down. And my guess is eventually at least 4 million, and it could be as much as 6 or 7 million if some things fall in a certain way. Mainly, what if the Chinese do start buying beans again here in the next several weeks, well ahead of when the planters hit the dirt. So that's something to watch there.
We've got a couple questions already so far in the chat about acreage battle coming up here. So it's definitely on a lot of people's minds. Let's talk about South American production in terms of corn here.
Well, I was just running some more numbers on that this morning just to put it in perspective. Looks like Brazil's heading for 180 million ton crop. That's 6.6 billion bushels. Our crop was what, 4.3 billion. And so you add in 50 million tons from Argentina, another 4 million tons or more, Uruguay, Paraguay. What's going on in South America now is starting to really dwarf what we're doing up here. And so we've got to keep that in perspective. And I can be pretty darn bearish beans if we don't start seeing some Chinese business come back, and we start to talk about more bean acres, and then we're trying to see what's the impact of Brazil, Argentina being $1 under our sales price. You know, it's just we've got some tough things to deal with here coming up.
Yep.
Ending carryout projection. That's big. You know, average farm price of 410. That's sad, but you know, historically, that kind of a carryout lines up with that kind of price. So big carryout, low prices, and we're going to have to deal with that until we change some production.
Let's jump over to soybeans and what's going on there. Obviously, because we're talking about that acreage battle, there's a lot that tips the scales one way or another, depending on what we're talking about corn. Let's start off with bullish factors with soybeans.
Well, 350 million is the current projected carryout. You know, that's a kind of a carryout stocks usage ratio that would tell us that the downside at this point is not tremendous. It also tells us that the upside's not significant unless we get some production concerns popping up here, acreage concerns, so on. So you know, I'm not terribly frightened of the downside at this point, but that could certainly come into play if that acreage swings significantly. Big question mark, you know, will the Chinese be concerned with President Trump enough to pay $1 more for our soybeans than Brazil? I'm doubtful of that, to be honest. I don't think they're in a position where they have to do that at this moment, but we'll see. When they were buying beans in late October, November, December, they were buying them pretty close to the same price as what they could have bought from the Brazilians, and most of those were going into the reserve, so they were being bought by COFCO, and which means they were not paying any, you know, domestically they weren't paying any tariffs on those. We talked about this a lot in the fall. The trade in general talked about this. Once you pass through the $11 mark, you're typically on a fast track 12 to 12. Well, we didn't make it in the fall. We may not make it this time, but it's out there. And if we see a big Chinese purchase pop up here in the next 2 or 3 weeks, something like that, we don't get any big acreage concerns from the Ag Outlook Forum in the week. You can't rule out $12, Nick. It could happen.
Absolutely.
And this crush has just been sensational. You know, what happens with 45Z and biodiesel is huge. It looks like the administration's pretty much into keeping this as a viable thing going forward. So the EPA needs to do some rulings, but I think we can be optimistic that our crush is going to be strong, not only this year, next year, but in the coming year.
Yeah, that's certainly something that's changing day to day as Washington figures out what guidance is going to look like there. Let's talk about some bearish factors here just to keep everybody prepared.
And just to clarify, if you see the bean pod up there, we do know at Farmers Keeper that we don't have 5 bean pods, but anyway.
This was I don't know if that's going to be bullish or bearish for markets or not. I guess it depends, but yes,
if we have a lot of 5 bean
pod
pods,
there.
it's going to be bearish.
Yep.
Exports, you know, it's been a problem. We're starting to catch up, but we're going to start seeing some weakish numbers coming, and it's just inevitable. We typically do at this time of the year. And
Right.
so it's getting that 1.575 is going to be a struggle unless the Chinese do come in and start buying a significant amount of soybeans. Huge crop, ridiculously big crop. And, they're pretty much past the point where they're going to see any significant drawdown in that. Their biggest problem right now is too wet in some areas, mainly in probably their main production state of Mato Grosso. So, and that can pull some bushels down, pull some bushels out. So, do we drop to 178, 179? Some people are saying 182. So do we drop off of 182 and get back down to 180? It's still huge. It's a ridiculously big number. Yeah, their price is just, it's a bargain compared to ours right now. So that's if your freight's not oppressive, non-Chinese destinations are going to start going to Brazil at our expense.
Yep, and you had mentioned that earlier too. We'll see.
Acreage, again, I'm probably a little heavier on that than most, but not only are we going to see some flip back, and I think just at a minimum, good old-fashioned rotation, you're gonna flip 4 million acres from corn to soybeans, and then you start to factor in: do we pull acres in from cotton? Do we pull acres in from rice? And with what's going on with prices with those two commodities, I think we shouldn't be shocked if we get to 7 million more bean acres, and that's not that would not be unprecedented to take our bean acreage up over 87 million. So,
talk about understanding profitability on the farm and how the macro economy ties to that. We've had a lot of conversations this winter and early spring here with guys taking a look at what their costs look like between corn and soybean acres, let alone cotton and rice and edible beans up north and wheat for all of our customers up in the northern plains, and looking at the numbers and saying, wait a second, if I simply shift over some of my acres, not talking about shifting everything over to beans, but if I shift over some of those marginal acres I have to soybeans, wow, what does that actually do for my profitability at today's prices? So that's really a key one that hits to the farm as well.
And just one more point on that, we just planted
Sure.
81.2 in 25, and so 2 years in 24 we planted 87.3. So if we flip back to 87, we should not be shocked. That should not ultimately be a very shocking development. Exports, again, lagging that, but sales are actually pretty close to being what we need to see. Looking forward, shipments are still running well behind what we need, but maybe sales are more important. Also, on the other hand, those sales can be canceled.
Let's look at what that looks like from a supply and demand scenarios that we've put together, John. Let's start with corn, because this starts to tie into that. John's put together here 3 different scenarios in terms of supply and demand, from large all the way down to small, and what that ultimately means for the ending carryout. So in other words, how much corn is out there available in global markets. John, can you talk through these scenarios, what you're seeing here, how you stratified these between these 3, what that all looks like?
Well, what I learned a long time ago, like 40 years ago, was that, I'm not going to outsmart the market. If I can't outsmart Mother Nature, know what she's going to do, I'm not going to outsmart these markets. And those of us that have been around I'll be going into my 45th year. Again, 1990 was a slap in the face that ended my thought that maybe I was a little bit smarter than the market at times. So what I like to do is just put together the possibilities, and instead of trying to predict price, which means you're predicting weather, say, if this happens, if this happens, if this happens, and then set up our marketing plan, our hedging strategies based upon, hey, let's be prepared either way in case things get crazy to the upside, things get crazy to the downside. And at this time of the year, most every year, you can kind of put together something like this and say, hey, if this happens, I could be kind of bullish in here. And in the end, most of it revolves around what's going to happen in June, July, and August with the corn crop, July, August with the soybean crop. Planted acres here on the corn. If I've heard some people throwing out 100 million corn acres, going up in corn acres. So I don't think that's going to happen. But let's say we just drop them a couple million. We come back with the yields, the same as what we had this year. You come down here to a 2.74 billion carryout. That's going to put a 3 in front of futures in the fall, I'm afraid, Nick. Not this, certainly high 3s, but we've seen futures fall under the $4 mark with smaller projected carryouts here in the last 5 or 6 years. So medium, and maybe this is the most realistic, 4 million drop in acreage, coming down with, a yield that's not as good as this year, and carry out at 2.15. Well, we're back to where we started. So not anything excited, anything exciting there as far as price scenario. But if we have 182.5, we probably now can say that we're going to have a scare. 182 will no longer be considered as a sensational crop. That's just a yield that is not going to be difficult to achieve with good weather across the bulk of the Corn Belt. Small, and I think this is not unrealistic on either one of those, where 2012 was the last belt-wide serious drought. So the calendar's ticking on that. And if that pops up, we can still see some $6, $7 corn prices will come back a lot quicker than what we think. But 92.5, 175, and that's not a serious drought. That's just a moderate drought. So I'm not trying to be sensational in here, but in 2012, we averaged 123.1. So I think a serious drought upon that, of that magnitude now, you're probably looking at a corn yield of 140 to 145. So you're looking at the same kind of price reaction that we saw in 2012.
Well, John, those are those extreme scenarios there too. But think about it, even 5 years ago, if we were talking about a 175 per bushel to the acre national yield being one of the low conservative end scenarios, that would have sounded crazy itself, right? But I think one of the things we need to think about on the farm is how over time trendline yields are really changing. And if you haven't updated those numbers and thought about what really are my new averages on the farm, you could be pulling back what you're looking at. But certainly 175 now starts to fall into that category. Not that we can't go a lot lower than that, but I think this is one of those scenarios when we talk to a lot of farmers, especially from a consulting perspective, this is one of the scenarios that we see for them where a small crop, it tends to be, even lower than that when we haven't really adjusted for where new averages for yields are and still being safe on it. Let's take a look at that and what it means for soybeans now.
Well, same scenarios there. What's production going to end up doing will ultimately be the determinant. We can't have a good August anymore. What's up with that? We just broke the record for soybean yield, 53.0. That breaks the record established in 2016. We went 9 years without breaking the soybean record. And that's almost entirely due to the fact that we really have been struggling over a good portion of the Corn Belt in August and September. So we need to break that trend. But if we do break that trend and we plant 87.5, we've got a really serious problem, because we can easily, and I've been working on these numbers for years. We've all seen what our monitors say, where we've had rain in August, maybe. I have customers that average over 80 bushels to the acre. And that's going to become really common in areas that get good rain throughout the production area. So if we have at 56, again, very, very, very doable with some good August, September weather. And that takes a carryout to 667 billion. And I increased here in that column demand by 200 million bushels over this year. So If you're going to increase production, we're going to find a way to get rid of more soybeans. We usually do, but in order to get rid of more beans, you're going to have to lower the price. So the price scenario there is at 667 billion, 667 million. You're looking at beans precariously close to having an 8 in front of them. So, and we don't have to go back very far. We only need to go back 6 years to the last time that happened. Medium, again, probably, one of those scenarios that is most likely to happen, more likely than the other two from a historical standpoint. That pops the carryout to 486 billion, so no bargain there. So acreage is huge. We saw it this year. What the USDA does with acreage is going to be a huge determinant. And the small, a little bit of an increase, a 2 million acre increase, another dry August, September, maybe with the last half of July being dry as well. 48.5 used to be a pretty darn good yield number, not very good anymore. And then I took, under that scenario, I did take usage down to, close to where it is, or be below what we were this year. And that's in part just due to sharply higher price, Chinese problems, Brazilian demand or Brazilian competition. So 176 billion. But at some point, if we ended up at 48.5, we were probably talking about 46 or 47 along the way. That could give us $13 soybeans pretty easily to have a chance to get some pricing done at.
As we look at this after looking at bullish and bearish factors, one of the takeaways I have as a viewer of looking at your analytics here is really with corn, it seems like we've got a little bit of less of a volatile situation going on there. Certainly there are factors that could bring the market up a lot higher, and there are some factors that could bring the market lower. But when we look at soybeans on a global level, especially, it's funny as we talk as a team here, there's just so many scenarios we go over where we're talking about, man, beans could go right back up to the teens, or they could fall down to $8. More the reason why to reward the market, hedge your protection and everything. But there's just so much in the balance right now for beans, especially as we get to the North American acreage battle out there. Let's put that to where the rubber meets the road and just talk about marketing strategies and how to play all of that in terms of on the farm grain marketing strategy.
Well, going back a year, and this is where I think it's important that we understand and know where our cost of productions are, because if we go back a year, we saw a nice bounce in February, and we actually got the March 25 contract, or the March 26 contract. We got it above $5 for a couple of days. And then within 3 weeks, we were back. We were actually fell to below where we are today. So, these opportunities come and go. I've seen this happen for over 40 years, and it's just, and I get caught up in it too. I did not have as much corn priced as I should have at that point. And, just to get something on, knowing that with a good crop, at $5, we were going to exceed most of our customers' cost of production. And, but exports were soaring, and there were some reasons to be a little friendly corn and, get caught up in it like we always do. And it's just easy to miss out on some opportunities. And part of that is you're thinking after seeing $6 or $7 corn for 3 or 4 years that, geez, $5 corn, I don't want to price any corn here quite yet. And then boom, it's gone. The last time a December contract traded above the $5 mark was January 2nd, 2024. So, it's been tough. And so I don't think we can beat ourselves up too bad for not being aggressive with our corn pricing over the last 2 years, because we haven't had that many great opportunities, that's for sure. And then we're going to, so let's get started at that 474 area. So we have a little bit of a move needed to get to that point. I think that could happen fairly soon if we get some help from the Ag Outlook Forum at the end of the week. And then let's just, start ramping up our sales every 15 cents or so. And now once we start getting a little bit more aggressive with that, pushing those numbers up, I think we need to get that covered with calls. 474 is going to look pretty darn good a year from now if we have a spectacular corn crop and we don't reduce acres as much as we think possible. So we need to keep that in mind. But we also don't want a bunch of $4.75 to $5 corn on it and sitting there at a $6, $7 futures market this summer. So that's where the sell and defend comes in. And this strategy here we've done for my customers that might be on today's call. We've done this multiple years in the past, and we just like to come out and buy a bunch of these. A $6 call, it could be a strike less than that or so, but 2 or 3 cents, they're not going to get much cheaper, and they won't get much cheaper because there'll always be some risk in there. Even if we drop corn another 20 cents, those aren't going to get substantially cheaper. So that puts us in a position to be aggressive with our forward pricing in case we get a scare of significance that starts pushing corn prices well above the $5 mark.
Mark, I want to pull you in here for a second. I mean, what's your take on that? The way I look at it really is, if we're going to make those sales and try to back them up, selling and defending, the way I look at it is, the market's moving 2-3 cents every few minutes these days. We've had some crazy volatility, especially in soybeans, and what that can do to protect when you're already naked on the rest of your sales moving that far. What have you seen guys start to play that out so far this year?
Yeah, these far out calls that you kind of got to look at them like, okay, they're not very expensive. It gives you great opportunity in case, and keep in mind the market doesn't have to run to $6 for us to be profitable in those things. As John alluded to, we could get some less acres. We could get a dry spring, what have you, and we could run to, look, we're sitting at 464. So we're 10 cents away from John's target to make some sales on new crop. And those out of the money sub calls, you're probably going to see them, double in value at a minimum in probably on a 30-40 cent run. Let's just say. So we get close to $5, they're probably going to be up 5-6 cents. You start to creep above that. So it just gives us a calming ability to be able to, it's always tough for guys mentally to make those sales. And as the market's running higher, well, I may miss out on this. I may miss out on this. These types of cheap calls allows you the ability to just kind of make those sales, knowing that, hey, if this market goes crazy, I have that, I have those calls in place out there. And so it just, should bring a calming presence for next to no money, 2 to 3 cents. I mean, cheap.
Yeah.
Protection.
And I've seen plenty, and time check, we've got another about 8 minutes here for the call, but I've seen plenty of instances with just talking with John in the past and Mark pulling this off with customers where when we're doing those kind of courage calls where they're cheap, out of the money calls, giving me some more assurances to sell grain at that 474 level when I really don't want to sell below $5, being able to load up on that. And then if we do see gains in that early on, not waiting for them to expire, but saying, wow, those 2 or 3 cent calls I bought, a few months ago, we had a scare come in with the crop. Now they're worth 5 or 6 cents. You know what? Why don't I take my money off the table, sell about half of them, put the money that I put in those back in my pocket, and let the rest ride for the rest of the year in case we really do blow up going towards harvest. So that's a good practical strategy of how we like to think about that in terms of an additional insurance perspective there. Let's jump to soybeans as we move on here. John, you want to lead us off with soybeans?
Yeah, and you can look at what happened in the fall. We ran beans up, we got them up higher than where we are now. And then what happened? We knew it was going to happen, but we still we watched it happen. And maybe there was some surprise at how swift this thing fell apart in the fall. But that's what these markets do. I've been watching this stuff happen for 40 years. And, you know, in our business, if you say, hey, I've seen it all. Well, until this year, you know, and then there's always something new popping up. And then you get the political stuff in there and it's just like, no, I haven't seen it all yet. So, you know, does that mean we're going to see $15 beans this summer? Or does it mean we're going to see $8.75 beans by fall? You know, that remains to be seen. But what we do know here, Nick and guys, Scott, we've calculated out our cost of productions, and for most of our customers, with a good crop in the fall, we're going to make some money. You know, we're certainly we got a better chance right now of making money on soybeans, quite frankly, than we do with corn. So let's get some stuff done. And I don't know, I don't think there's a great reason to be holding on to any old crop soybeans past this week, really.
Agreed.
Yeah, 10%, you know, after that, every 20 cents. And this is just going to be a lot of individual thoughts in here too. You know, what are people comfortable with? Forward pricing, how quickly do we want to get this cost of production locked in? And then at some point, you know, my path in the past has been I use the puts. I start coming in with the puts after I feel like I've pushed that cash selling far enough along. Starting to sell bushels that I'm not comfortable that I'm going to have or well insured, so on and so forth. Then I look at the puts, because again, we could get into a situation where we could drop the price of beans $2 from where we are. So at some point, puts have to be a significant. Now, maybe this year we get a little more aggressive with puts before we get more aggressive with cash selling.
Yeah, Mark, you and I were talking about that the other day. One of the ways I think about it is, you know, if we do ramp up there and you're making those sales, you're certainly, some of our customers are 40-50% sold on new crop beans already, depending on who they are. That's where we start to get kind of iffy about, hey, we don't know about production yet. It's pretty early. We don't want to go out there and make those cash sales there. That's when we come in and say, hey, let's cover that with puts. Are you seeing something like that start to play out with guys, or is it a little too early before we get acreage numbers?
I think it's a little too early with acreage numbers, but I think, as you know, as John has put these slides together, given the prices, given where insurance is playing out and going to be sniffing $11 here for guys in the month of February's average. It seems like, and John sold me, it seems like guys ought to be aggressive on the soybean side for sure. Taking action, and there's always things we can do. We can cover stuff, you know, if we get a little too sold, we can cover things with some call spreads. Call spreads are, you know, you can kind of get away with buying cheap calls in corn. Soybeans, they're a little bit more expensive. And so a lot of times it makes it easier if we do some type of call spread where we're buying the 12, selling the $14, something along those lines. So,
yeah. Now I'm going to go just to the general takeaways here, because we're ticking out of time, and I want to we've got two general questions coming in, one mostly around acreage, another one around financial consulting that we've gotten 2 or 3 questions of. So we're going to address a couple questions here. My big takeaways that I want you on the farm to be thinking about for those farmers in our audience, which is the majority of everybody here, is number one, know your cost of production. I can't tell you how many times this winter we've had these conversations with guys going over their actual profitability and cost of production, saying, oh man, I could sell beans today and make $120 an acre right now. I didn't realize that. Maybe I was listening too much to the coffee shop talk. I can lock in some profits or not, or where can I make these types of investments? Really important to know your farm in particular. Don't just listen to what's going on at the coffee shop. Another big takeaway is sell and defend. When you hear us talk about sell and defend, what we're talking about is hedging off that physical cash sale that you make, whether you're selling corn or beans at a level that makes sense for you, and defending that using an option strategy in case some of these outcomes that John and Mark have been talking about come to fruition and beans do run up to $15, so that you're not just depending on, well, I've always got more grain to sell, but you're actually buying some protection there and having that on. And that's really what a lot of times we call those courage calls, right? That's when we get into those 2-3 cent calls that are way out of the money over there, where you're taking that every day in terms of volatility in the market, and you're reinvesting that and trying to hedge for that what if scenario further down the line. I'm going to jump in the last couple of minutes here. We have a question. We have several questions around 2 different topics that I'm picking up here in the chat. One of them, like I said, is around the acreage conversation. The other question is about loan renewals. John, I'm going to ask this question to you. I'm basically just trying to aggregate what these questions are asking around acres. But basically, what the most common version of this is what kind of probability do you have of us knowing that there might be a radical shift in acreage to soybeans just because prices are high right now, and for most people, costs are relatively low there, and what might that do to corn prices? A couple of the people I know here, they're in Iowa and Illinois, so I'm assuming they're more corn on corn type of guys. But what do you see that playing out, where we could get a dramatically higher number of bean acres, and what that'll do to the markets?
Well, if you go back to last year and what happened, starting with the Ag Outlook Forum threw that possibility out that we were going to see a pretty good increase in acres, and then March 31st took it up, and then June 30th took it up, and then the next 2, August and September, we saw more acres, and then the killer was in January with that harvested acreage number. But I think we capped that market last year. We had those acres. Exports were exceptional, but we could not get over that acreage thing. And then once we planted the crop in relatively good fashion, our backs were against the wall. We could see that flip this year to where, 4 or 5 million. And I think the Ag Forum group will take acres down 3 or 4 million at the end of the week. I think that number could come up a little bit in March. And then again in June 30th, if certain things happen. But we're not going to have that cap on corn prices this year from the acreage anchor. So, and that really could get interesting if we get off to a slow start with planting, and maybe lose a few more acres at that point to soybeans.
I agree with you there. And, one of the things that I always think about as a kicker is I just feel like corn is king, and that I always tend to weight higher the fact that, yes, soybeans pencil out more this year, but we've also got to play into the farmer psychology of what's going to be planted as well. And there's always that bias towards corn acres coming in. So maybe, 3 or 4 million acres is starting to look more realistic than 5 or 6 million acres to that side. Okay, couple minutes left. Scott, we've had 3 questions around loan renewals in general. For those of you that are continuing to chat stuff in, this is going to be the last question that we're going to take. You can always reach out to us. But basically what these questions, some of them are mentioning bankruptcy. Mostly what these questions are asking is, what is the latest timeline you see for preparation for the crop in terms of loan renewal? And what is that? How long does that timeline take if you are having trouble with loan renewal? The questions basically are surrounding around, hey, we're getting close to planting here. If people don't have financing locked in, is that something that can be turned around? What do you typically see in that process? I think it's coming from guys that mostly are trying to get that done before year end.
Well, yeah. Do I have 15 minutes? No, seriously, it's a real deal. So let me take it as best I can and try to answer broadly to cover a lot of ground. Renewals are taking much longer this year because of the financial issues. So get in there ASAP. It doesn't matter how much money you lost last year. Don't stick your head in the sand. You've got to go talk to your banker. I just sat with a banker on Thursday in his office where he said, man, I can't get my customers to come in here. They're worried about the renewal. Well, your banker, if they're a great ag banker, they understand losses. They know what was coming more than likely from a macro perspective. You got to go ahead and face the music. The earlier you get in there, financial communication, I say it's all about the numbers. Like it takes a lot of communication, even when things are bad. So that's the first point I would make, Nick. The second point is that the thing about what's going on this year, you've got the USDA and the supply and demand balance sheets that John and Mark are alluding to. And then you got your personal balance sheet, your personal financial statement. And so I'm just going to add and kind of tangentially talk about acres here. Like, I think finances are going to push acres in to more soybeans because a lot of borrowers are looking to lower their exposure to debt. So if you have high debt because you weren't able to pay off carryover and you got high debt on your balance sheet right now, the strategy is to lower that potential of more debt, right? If you're a borrower and you have no more working capital and you have to borrow money, the best option is to borrow as little as possible, but don't cut yourself off on what you need to operate. So I think I answered the question. Just since acres is such a big ordeal right now, I thought I'd throw that in there. But like, you get in there now, the process is taking, I'd say, 3 to 4 times as longer to get a loan renewed in some instances. And there are banks, guys, that are leaving agriculture right now. So you've got to take action if you haven't already. Give us a call. We can help you with that too.
Well, that's a good place to leave things, of bringing it back home directly onto the farm. That's what we're trying to do at Farmers Keeper all the time, right? How do we balance all the news out there, all the social media stuff out there about what's going on in the broader global economy that can affect prices, but trying to bring that home to you and your farm directly. And I hope that's a bigger takeaway that everybody's getting here, because nobody has a crystal ball and can understand what's going to happen there. Let's start with what understanding on the farm, and then projecting out those scenarios of what if, through the lens of your own personal farm, with all those good analytics. So I want to thank everybody. There were a few hundred of us on this call today. I want to thank all of you on there. We're going to send out this recording as well. We're going to put it out on YouTube for anybody else that wants to join and see this. And let's hope we reach into some better profitability than we have in the last couple of years. Farmers Keeper is going to be here to help support you in whatever way we can with that, in all the ways we talked about. So everybody have a great day. We'll see you tomorrow on Tuesday when the markets reopen. Thanks, guys. Cheers.
Bye.